Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Motherson Sumi. Is it a value buy at these levels or an avoid for sure? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Motherson Sumi, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Also, if you want one-on-one discussion with me, we can work things out with a fee. You can directly email me. Now about the company, Motherson Sumi is a leading auto, you can say parts manufacturing producer, and it is perhaps the leading player in this space. It boasts of marquee clients, but their major business comes from Europe. In fact, 30 to 35% of their business comes from Europe, produces multiple car parts and bike parts. Their client include Volkswagen, Mercedes, Ford, etc. Dividend payout is good, but it's going to be under stress because of the kind of European geopolitical situation that we are facing. If you look at the numbers, these are Q3 numbers. So market cap is around 47,000 crores. Sales were 16,000 crores versus 17,000 crores. So it dipped around 6%. Profit dipped remarkably from 1,200 crores all the way to 390 crores, or 75% decline in profitability, owing to pressures in Europe, owing to pressures because of the pandemic. There's high promoter and institutional holding at the moment, so it is doing sales roughly around 60-70,000 crores, and the market cap is around 47,000 crores. So this looks extremely attractive from a 2-3 year basis, but currently, say on a short term trading basis, looks very difficult. So I'll discuss about that later on. Margins have shrunk, but looks like bottom in place. I believe that the way margins are shrinking, I don't think it's going to go down further, although there will be a lot of cost pressure with raw material costs, etc. But margins may go down another 30-40 basis points, but that's just about it. So that's my call. But when will the company recover in terms of performance? When will the company recover in terms of numbers? That is to be seen yet. If you look at the performance of the stock, then the stock has been an underperformer for the past few months. In fact, it has gone down appreciably over the last 6 months from around 230 to 40 levels all the way to 150, and has absolutely capitulated, collapsed by nearly 50% as I mentioned. But numbers show pressure on margins, which may remain. So why it may remain is that I was looking at some of the interviews from the auto space, and the industry itself feel that the raw material prices will remain up. There are issues with the, you can say, other raw materials acquisition or pertaining to particular products of raw material that are used in autos, and so this will just continue. I mean, semiconductor issue may just continue because of this geopolitical situation that has cropped up even more. Oil prices will remain very elevated, so things are looking extremely difficult for the auto space for at least the next 1 quarter, 1 to 2 quarters at least. Yeah, there is a you can say a good thing is that there is strong management, and it is a market leader, and the return ratios are perhaps the best in the industry. But you need to understand, if the industry is completely under pressure, then even the best of the companies may not perform. So why things look bleak for short term? I don't think from long term there is a issue. I think from a 3 year perspective, these are very attractive levels to get into. But from a 6 months perspective, auto industry may remain under stress, especially with this new European situation that we are having, with the European countries getting into skirmish, and this could really escalate. And there is economic slowdown fear, which is escalating globally, especially in US. See, what will happen is Europe is under the stress. If US gets into this muddle, US would be in deep trouble, because it is just now that their economy is coming back into out of, say, a semi recession. It is just now that the inflation has risen and people are buying products, and you can say producers are able to sell at higher prices. And if this thing escalates with whatever that is happening in Europe, I think it's going to have a huge burden on the global economy. And Motherson Sumi is a global economic play, 30-35% in Europe, high teens, you can say numbers of, you can say sales coming from US. So it is extremely difficult to see over the next quarter, 2 quarters, for the company to really perform. Maybe by the end of the year, one can look at the stock even at higher levels. So it is not about the price of the stock. One needs to look at how the you can say situation abroad is, and then take a call. Even if we buy at 200, it's fine. When we know that things have you can say subsided and things look fine going future. So projection of further stress in next few quarters is there, and there's multiple factors to hit markets in March. You have the IPO, you have you can say a lot of things. People sell their stocks in order to take out their losses, and you can say what is called as tax harvesting. You have this skirmish that is going on, or a complete, you can say, struggle that is going on in Russia and Ukraine, which could boil any time, which should subside also. You have the interest rate hikes and many other things that are coming up. So it's better to look at very strong companies in this regard rather than looking at something like a Motherson Sumi at the moment. So my call on the stock is that if you have it, then hold on to it. In fact, if you get a chance to buy it at 120, 125, if it falls another 10-15% from here, very good levels to buy and then hold for 3 years time frame. This has now become a 3 to 5 year play rather than a short term play. In fact, when it broke 175, 180, the call was to not trade at all in something like Motherson Sumi. 180, 185, it was looking good, but since it has completely collapsed from those levels, and when it broke 175, 180, it was a call that one has to stay away from it. From a short term perspective, 6 months perspective, I have no recommendation here whatsoever. One needs to avoid all auto companies, auto ancillary companies, etc., because things can go down even further from here. Second thing I want to say here is that for long term investors, see, auto ancillary goes through cycles. So what will happen is this will have a 3 year, very good 3 year cycle in which the stock will get past 300, maybe even 350, 360. So it is these times to buy into something like Motherson Sumi and probably sell at 300, 350. That would be my call. From a 3 year perspective, a double in 3 years very much possible, but in the next 6 months we could see a lot of pressure. So it's a good 3 to 6 year play, no immediate reward possible, and it is a cyclical play. You need to understand that, otherwise you will feel that okay, this is a consumer play like any other auto. All auto plays in the auto space, the whole auto sector is cyclical in nature. So a 3 year bull run cycle will begin after all this subsides, so it will take at least 4 to 6 months from here on in. So this was my video on Motherson Sumi. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.